Alright, welcome to another screencast. Today we'll be looking at the sales ledger control account, which is also known as the total debtors account or accounts receivable control account. Alright, the question reads as follows. The sales journal for March 2017 was destroyed, but Brent was able to provide the following information. Alright, the information is given. Prepare sales ledger control account for March 2017 and insert a suitable amount for credit sales. Now let's bear in mind that the sales ledger control account is not the sales account. In fact, the sales ledger control account is a debtors account. Alright, and remember also that debtors are assets, and to increase the balance on any asset account, we would debit the account. Now, as a result of that, any item that is placed on the debit side of the control account for a debtor would increase the amount of money the debtor is owing. Any amount that is placed on the credit side would cause that amount owed to decrease. Alright, whenever we're going to prepare a control account, we have to ensure that the information we're using is relevant or pertinent to the given or the specified control account. Alright, in this question we actually prepare the debtors control account, so we're going to just scan through the question quickly and ensure that all the items that we're using pertain to the debtors. I've taken the liberty of highlighting all of the items that pertain to the sales ledger control account. As we can see, checks paid to credit suppliers 3013, that deals with your purchases ledger. Discount received also deal with your purchases ledger, and returns to credit suppliers, which is also called return outwards, that also deals with your purchases ledger. Alright, I've taken the liberty of preparing most of the sales ledger control account. Let's go through it. Debit balance in sales ledger on March 1st, and also credit balance in the sales ledger on the same date. Alright, the debit balance was placed on the debit side, the credit balance on the credit side. So once you're given opening balances, whatever side you're told to put it on, you would always place it on those sides. Alright, next we had checks received from credit customers. If we're receiving a check, it means that our bank account, the amount of money in it would increase, so we would have debited the bank, and as a result we'd have to credit the sales ledger control account. Another way of looking at it, the debtors are paying us for the amount of goods they would have taken previously, and as a result the balance should be decreasing, so we place the amount of money paid on the credit side. Discount allowed of $55. Alright, discount allowed of $55 will be placed on the credit side, because also it will reduce the amount that they're owing us. Now, before the discount allowed, we had another item. Checks received from credit customers later dishonored, $350. Now that $350 represents $350 that would have been included in the amount of $2,145 that would have been collected already. Alright, now because that amount or that check would have been dishonored, we have to cancel or remove that $350 from that bank balance. So what we're going to do, we're going to put it on the debit side. Alright, and we're going to write dishonored check. Next we had returns by credit customers, 276. As we know, returns by credit customers, that would be goods you would have sold to them previously, so that sales return or returns inwards. After, we had contra entry, 182. Now a contra entry, or set off as we'd call it, it's a common amount that is owed to or by a person. Alright, now let's just assume that that customer owed us 100 and let's say 82. We owe that person, let's say 190. The smaller of the two figure, the 182, it would come in both places, and then the difference would just be paid later on. Alright, bad debts written off of 62. Alright, bad debts has the effect of reducing the amount of monies owed. No, we'd rather not have bad debts. It's an expense. $62 go on the credit side. Now, on the 1st of April, we're told also that there was a debit balance in the sales ledger of $2,670 and a credit balance of $86. Now, I place those two items so you can see what is happening. Alright. Now, remember, the balance on an account is always brought down. At the end of the month, it definitely means that we had a balance carried down of $2,670. Alright, so a debit closing balance means that the carry down should always be placed on the opposite side, and a credit closing balance means that the carry down should be placed on the debit side. $86. Alright, so let's total both sides and find out the missing figure if anything is missing. So we're seeing that the debit side gave us a total of $2,782, whereas the credit side gave us a total of $5,530. Now, evidently, something is missing. Remember, initially the question told us to prepare the sales ledger control account for March 2017 and insert a suitable amount for credit sales. Alright. So we're going to insert that figure for credit sales, okay, and we're going to find out what amount was needed to make both sides equal. Alright, so we're going to say 5,530 minus 2,780. That means our sales figure should be 2,748. Alright. Now let me recalculate. Alright, so there you have it. Both sides of the control account have balanced. Thank you very much. Here ends today's tutorial.